Hey guys, welcome to today's video. So there are two viewpoints in the market. Viewpoint one is that everything is hitting an all-time high. For example, US stock market has hit an all-time high, gold has hit an all-time high, real estate all-time high. Indian equities not all-time high right now, but it is likely to go up, which I'll speak on this video. So this is viewpoint one, optimistic viewpoint. The second viewpoint is pessimistic. People are speaking about the fact that US debt has become too high, $38 trillion of debt, $1 trillion of repayment of US debt, US dollar going down, US is going to collapse, there is trade war, there is this, there is that. So what is happening? Two opposing viewpoints, and people are getting confused that should you be investing your money or should you just wait for a 30-40% crash in the market and then deploy your money, because if at that point you deploy, you will make crazy gains. So is this 30-40% crash coming? The short answer is a no. Okay, I don't think this 30-40% crash is coming as per me, but I might be right, might not be right. So I have built my strategies accordingly, which I will discuss in a minute. And on this video, I'm going to make this macro case, give you a macro framework. By using that framework, you can analyze the situation yourself. So I'll cover complicated topics like US debt, how it's going to impact, fall of US dollar, etc, etc. Now, very quick answer to my critics who keep on commenting random stupid things on my videos. Guys, here is my portfolio. It's generating 35% as of today in US dollar terms. I started this in January of this year. I speak on performance. I don't speak on random stories. Ye ho jayega, wo jayega, 5 saal baad, do long-term investing only. No, I'm generating profits. I'm speaking with experience. My students will confirm that this portfolio is real. Now, this beats 99.99% funds in India. So when I am commenting or giving contrarian opinions, it's okay. Please ignore it. No problem. Okay. But please do not unnecessarily bash people who are performing. At least, yeah, that's common sense. Okay. So at least hear me out. If you don't like it, well and good. No point. Just hear my viewpoint also on things and then juxtapose it. Hear someone else's viewpoint. So, okay. So I'm going to present my viewpoint, my macro thesis, and how I'm investing in this market, and will present a case study. Okay. So first things first, you need to have a macro viewpoint on the market. That is the market going to be bullish, neutral, or bearish? So I'm moving towards neutral to bullish. Okay. So this is my viewpoint. Now, why am I saying this? This can be understood by using a broad macroeconomics framework, and it comprises of three things. The first key thing is the growth of money supply. So if we ask a very simple question that, hey, why did everything go up in price between 2020 and 2025? It was due to growth of money supply. A lot of money was printed. So between 2025 and 2030, will a lot of money be printed? The short answer is a yes. So take a look at this chart. You will see that US 2025 debt is $38 trillion. By 2030, it is projected that US will have $50 trillion of debt. This represents roughly a 6% monetary expansion. What about India? India will have a 9.5% CAGR expansion. So this is going to expand. So between 2025 and 2030, whether we look at US market, India market, world market, monetary supply or monetary growth rate is going to be there. Now, what does this mean? That, for example, if India mein 9.5 hai, so see, in INR terms, India market should at least give 9.5%. This also means that the inflation or price increase, जिसके बारे में हम लोग सब परेशान रहते हैं, that you know, price is going up, this, that stuff, bhai, it's not going to slow down. It is going to go up by at least 10% a year for quality things. The minimum returns that you need to make in the Indian market, INR terms, has to be 10% after tax, okay, not before tax, which means baseline return of 12.5-13%, which again sets to Nifty 50. Okay, so usse zyada hi banana hai, 12.5-13% se, then only your wealth is going to be preserved. This is pure math. This is not something that I'm making up this data or something. Okay, so this is one. This is the first layer, how you should analyze things, because liquidity creates fundamentals. Fundamentals do not create liquidity. Long story short, the key takeaway from point one is that the growth of money supply in the next 5 years is still very high. Therefore, assets will continue to rise. Point number two, or the second layer of the framework that you can use to analyze whether there is going to be a bubble or not, is to look at in what part of the economy there will be a bubble. Here you need to look at the volume of asset increase. Now, what is the meaning of volume of asset increase? So let me give you an example. So for example, between 2020 and 2025, the entire India stock market, generally one could say, increased, because whatever the Nifty levels were, they were at 12,500 just pre-COVID. Then right now they are at 25,000 plus. So market has doubled, right? No problem there. But what part of the market has not doubled? I would say IPO market. Why? Because there was volume of expansion of IPO assets. A lot of absolutely bullshit companies, right? I'll not name them. They launched their IPO at whatever prices, and whoever bought them has gone bankrupt in a way, right? Now, going forward between 2025 and 2030, you might have different set of assets which will do poorly, which brings us to the third point or third layer of this framework, that whenever macroeconomy goes sideways or slightly bullish, there are going to be winners and losers. Compared to, like, for example, in 2008, we had a secular crash. Right now, here you will get something called as K-shaped economy. Okay, so now what is the meaning of K-shaped economy? So let me just quickly explain. Now, K-shaped economy looks something like this, right? So there is this part of the K, right? And these are called as net winners. And then there is this downward sloping part of the K, which are called as net losers, right? Net losers. Now, it's becoming increasingly evident, right, that for example, there are a bunch of industries like AI. Now, this is very high growth. For example, if you consider semiconductor, if you consider cryptos, right, if you consider tech stocks, now these are pulling up everything. For example, just a statistics here, again, number, not my opinion. If you consider US economy, it is growing negative, okay, negative growth rate, provided you take out all the AI companies out of the US economy. But if you put back AI companies into the US economy, the growth rate of US economy is positive. Now, news anchors will tell you random headlines that, you know what, US economy is going to collapse, this is going to happen, that will happen. Correct. There will be net losers, and generally the US economy will do badly. But a segment within the US economy is going to benefit from this. Okay, so this is the upper part of the K-shaped. Okay, so here these are very clear industries. Now, why that will grow, I have made a separate video on this. Honestly, there is a war going on, right? AI war between China and the US. A lot of private companies are being invested into by the US government, Chinese government. Massive capital expenditure is being undertaken by the US government and Chinese government both in these industries. So these industries are in a bullish phase. In fact, I would argue that these industries will grow at more than 20% plus CAGR. So what have I done? And this is the first key takeaway, that I have already built an AI first portfolio. So for example, take a look at this portfolio. The reason why it has grown at more than 40% in INR terms is very simple, because majority of it is AI. Okay. Now you'll say AI bubble hai, fat jayega, this, that stuff. So again, I've helped you analyze that, okay, these three things that you need to take a look. If we see something called as, right, earnings decline, or even a hint of earnings decline, then yes, I do agree that there will be a 10-20% correction on my entire portfolio. Which brings us to the second pillar, right? That, okay, if you're investing in the market right now, then you cannot take naked risk. Now, what is the example of naked risk? Now, let me just show it to you with the example of AMD. Now, here is the snippet of AMD from my portfolio. I have put in significant amount of money, 50 lakh ke aaspas, 50 lakhs I've invested in AMD stock just through one portfolio. So I have a few more portfolios. So my total position on AMD is huge. Okay. And what has happened to AMD stock, if I just show you, that it has gone up from its lows by 207%, right? In how much time? That's more important. So from April till now, so April, May, June, July, August, September, October, right? So 5-6 months mein, it has gone up by 200%. This is absolutely crazy, because here we are not speaking about a small cap type of a company. AMD is a fairly established player. You already know it. So this is doing well. Okay. Now, at this juncture, for example, here, if you go and invest your money in AMD, that is called as taking naked risk. Now, AMD, I'm just using it as a case study. If you take a look at Microsoft, if you look at Google, so Google vagara pe bhi, my portfolio is up like 60% or whatever, right? Now, you cannot end up buying these companies here, right? This is just pure madness. What you need to do is that you need to start selling put options, right? If you can do that, now that's a separate topic altogether. Maybe I'll make a video on that, right? How to sell put options and what is the advantage of selling put options. But very simple concept that I would like to cover is that this is a risk management strategy. Okay. Now, risk management strategy means that, see, today, let's assume that I have $0 invested in AMD stock or whichever stock you want to buy. You consider it to be a high quality stock. You want to buy it. But you are seeing that, you know what, boss, this has just run up too much. Okay. I would want to start my position when it comes down by 20%. So what you can do is that you can sell a put option here. Now, what this does is that it basically signifies that in case AMD falls by 20%, then you will have to buy AMD. This is the meaning of selling a put option 20% below its current price means. Then you say, okay, what's the advantage? Because Here, when you sell the put option, you will still make monthly money, right? So you can make maybe like around 2%. So AMD right now has very high IV or very high volatility. So therefore, you will be able to make fairly high premiums, right? So premium money. And if you keep rolling it over, then in a year, you might be making somewhere around like 15 to 16% or even more on something like AMD stock right now. I'll have to check the exact premiums that you're receiving. But this is the story behind it. So this is called as not buying like naked things, right? Where you're just simply going and buying absolute tops in the market. So this is something that I'm teaching my community also. In case you guys are interested, I do teach advanced things in the stock market. This is not options trading. This is more around building a portfolio and reducing risk on it. Okay. So maybe I'll make a separate video for better clarity. But long story short, what you need to remember is that, see, there might be a bubble, I don't know, okay, and there will be a time when earnings are going to slow down. Whenever earnings slow down, there will be a scenario where good stocks like AMD, Nvidia and all these companies will correct by 20%. What's your strategy to hedge? Because if your strategy to hedge is that, you know what, I'll wait for like collapse of the economic bubble and then I will go and buy it, the situation might be that stocks will run up like this, okay, and then after rising like 50% plus, they might fall like 30%, and then you will say, aha, now I can go and buy it, okay, and that might take like another 2 years, who knows. So therefore, you must understand risk mitigation strategies, and there are primarily two risk mitigation strategies. One is called as managing your cash to investment ratio. Now here it means that, for example, if I'm running like $1 million portfolio, then what I would do is that I'll keep $200,000 as cash or 20% cash. Okay, so 20% cash and 80% I'm invested. So this has a 20 or to 80 cash to investment ratio, right? Now the advantage of this is that in case there is a market correction or a cash, I can always go and invest money. So this is something that you need to run. Now second option is called as buying long dated puts. Okay, so this is second way of protecting your entire portfolio. Now options based investing is a complicated topic. Maybe I'll make a separate video. In case you guys want, you can drop a comment. Should I be making, not making? These are two primary strategies through which you can protect your portfolio. So in case you guys are keen, I'll make a separate video explaining how I have protected this $1 million portfolio and why I will only have a 10% maximum drawdown. Even if the market falls by 50%, it doesn't matter to me. Okay. So this is called as protecting the portfolio. Now, third key point has to do with fear mongering. For example, right now, there is a lot of commentary by like analysts that, you know, US economy is going to correct a lot. US dollar is going to collapse. US is just going to be a bad economy. So, people will stop trusting the US dollar altogether, and everyone will move to gold. Okay, so here what you need to do is that you need to do a little bit of analysis and use logic. Okay, so let's say that US dollar collapses. Now, what do you think will definitely happen if US dollar collapses? Well, almost 70% of the world trade happens in US dollar. So fiat money will collapse. Now, fiat money means that even renminbi will collapse. Okay, why? Because US has given $38 trillion of debt to whom? To a bunch of other countries also and to itself also, right? So if US dollar goes to zero, people owning those assets also go to zero. So their buying capacity also goes down. It's not as if that they can randomly buy things. This is a real problem. Now then you will say that, okay, gold prices will go up dramatically. Fine, okay, great. Gold prices go up from like whatever 1 lakh rupee per 10 grams to 10 lakh rupees per 10 grams. Okay, fine, great. You want to liquidate your gold. Who would you liquidate it to? You'll go to jeweler. And he gives you like US dollar or INR. Will you take that US dollar and INR? The short answer is a no. What the message that I'm trying to tell you is that people do a lot of fear mongering, but they don't think about things holistically. Think yourself, right? If gold goes to like 10 lakh rupee per 10 gram or something like this, will you even accept currency payment in US dollar or INR, etc.? It means that fiat money is failing. Okay. So what I'm trying to tell you is that, see, there is a healthy balance of asset classes in the world, right? And different asset classes need to survive. Money needs to move from one overvalued asset to another undervalued asset. This is the most important point from this video. That right now, because everything is at an all-time high, where will the money move? Will it move from equity to gold or gold to equity? I don't know. Generally, things which are high can continue to go higher. But you can't have a situation where an asset class itself goes to zero, which has been fundamentally proven. For example, gold is a fundamentally proven asset class. It is not going to go down by like 100% or something. Similarly, equities is not going to go down by 100% or something. Similarly, fiat money is not going to go down by 100% or something. So do not believe in this fear mongering. Now, here are the key summary points that I will give you as retail investors. What is it that you should precisely be doing at this juncture? Number one is that you need to pick grade A or quality A type of assets. Now, what is the meaning of grade A assets? For example, when we think of equities, we just consider equity as one asset class. No, it has different quality of equity. For example, IPOs, Mama Earth stock, is a certain type of an equity. Similarly, Indian equities are a type of an equity. US equities are a type of an equity. You need to buy category A or top tier equities. Now, how do you identify top tier equities? Well, these companies or these equities can grow their profits, or these companies can grow their earnings or profit by at least 15% in dollar terms. If that criteria is met, then it's a tier A or gold category kind of an equity and a gold quality asset. Okay. Similarly, in commodities, you should go and buy gold. It's a gold, right? It's gold quality. Okay. Similarly, in cryptos, you should buy BTC. So all these are top tier. If you're buying real estate, then what type of real estate to buy? Land, villas. I have been saying this. Idiots show up on my video कि तुम्हारे गोवा के विला डूब गए भाई अब जाके खरीद लो साउथ गोवा में अब right challenge you right go and buy. When I started buying villas in South Goa, I bought it at 1.8, 1.9, 2 CR, this range mein. Same villas are now getting sold at 3.5, okay, easily, okay. So I'm not making this stuff up. You go and try, buy, right? So open challenge, go and buy, right? There is no supply, right? So where I bought my villas, land, etc., those have gone up dramatically. I'm very happy with my investments. I've made more investments there. So it's not as if that I've left it. In Dubai, I plan on buying more. I have been selective in terms of buying, and with time I'll buy. I consider these markets to be good. So wherever you are buying real estate, buy high quality real estate. What type of real estate I was against, right? If you buy flats in Noida, Greater Noida, all this stuff, it has barely grown, right? It will be Dwarka-like situation in Delhi. So long story short, now is the time between 2025 and 2030 where you need to aggregate high quality assets, even if they are pricey, but with a risk mitigation strategy. So this is precisely what I covered on this video. In case you didn't get it, please go back, rewind, watch this video 2-3 times. It is going to be very, very important. And if you feel that I can be of help, if you want to check out my portfolio, how I'm building my next portfolio, do check the links in the description and comment box. You'll find useful information and you can sign up for my global community, which is now the largest investment community in the world. I cover fairly advanced strategies on that community. So in case you feel you can benefit, definitely consider joining. Thank you so much for watching and I'll see you soon.